Sudeep, should I click on go live?
Yes, yes.
Yeah, going live.
Very good afternoon, ladies and gentlemen, and very warm welcome to Grant Thornton Bharat's insightful session on decoding the impact of the Honorable Supreme Court's decision in case of safari retreats. I am Krishan Arora, partner, tax, regulatory, and finance consulting at Grant Thornton Bharat, and it is my pleasure to host you all as the moderator of the session. On behalf of Grant Thornton Bharat and my esteemed co-speakers, I extend my heartfelt thanks to each of you for joining us today. In this session today, we will deep dive into some of the key aspects emerging out of the Supreme Court ruling, understanding its potential impact across sectors, and explore what it means for businesses as the position stood before and now as the decision stands announced. This landmark judgment has definitely sparked significant interest and debate amongst business owners, industry experts, and professionals, specifically due to its implications around the input tax admissibility in relation to construction activity. To set some context, Section 17(5)(c) and D of the CGST Act restrict input tax credit on works contract services as well as on inputs and input services which are used in construction of immovable property. Safari Retreats, which was a company engaged in construction of malls, had challenged the constitutional validity of the said provisions before the Odisha High Court on the ground that restriction provided under the Section 17(5)(d) should apply only in cases where there is a break in the tax chain. Since the constructed property was intended to be let out for rent, which constitutes the supply of services, input tax credit should be eligible. The Odisha High Court, on the side, while emphasizing the objective of the GST law to ensure a seamless flow of tax credit across the supply chain, read down the narrow interpretation of Section 17(5)(d) as put forth by the department. It has held that if the taxpayer is required to pay GST on rental income arising out of the investment on which he has paid GST, ITC benefit should not be denied. However, on the constitutional validity of the provisions of Section 17(5)(d), the court denied holding the provisions as ultra vires. Subsequently, the department appealed against that said order before the Honorable Supreme Court. So the Supreme Court in its decision has upheld the constitutional validity of Section 17(5)(c) and D of the CGST Act 2017. However, the Supreme Court has provided a significant exception by introducing the functionality test. This test allows certain immovable properties like shopping malls, warehouses, and other commercial facilities that may qualify as a plant under the GST law, provided these structures are not just passive locations, but actively function as business tools. Drawing distinction between plant and machinery and plant or machinery, the Supreme Court clarified that if a building is essential to build operations such as generating rental income or built to serve specific technical requirements of the taxpayer, it could be treated as plant, making it eligible for ITC claims. Notably, the Supreme Court remanded the case back to the Odisha High Court to determine whether in the subject matter, the shopping mall in question qualifies as a plant, which could potentially allow ITC on the construction cost. This ruling possibly presents an opportunity for businesses across sectors to reassess their input tax eligibility under this expanded interpretation, which could have a far-reaching implication for their tax strategies. To help us decode the technical and the business implications of this ruling, we have with us an esteemed panel of experts. Mr. Manik Malik, Senior Vice President and CFO BPTP Limited, my colleagues at Grant Thornton Bharat, Ms. Shabala Shinde, Partner and Real Estate and REIT Industry Leader for Grant Thornton Bharat, Mr. Sachin Sharma, Partner with Grant Thornton Bharat, having wide experience in real estate sector, Mr. Manoj Mishra, Tax Controversy Management Expert and Partner with Grant Thornton Bharat. Together, our panel will break down the key points for the ruling and discuss how businesses can prepare themselves for the changes ahead. Before I hand this over to my colleague Sachin to take up the technical insights of the Supreme Court decision, I would also request all the participants, if you have any queries or clarifications, please submit the questions in the Q&A box below your screens. Our team will try to address them real time during or towards the end of the session, making the session more insightful. Once again, ladies and gentlemen, thank you for being here with us today and stay tuned. Without further ado, I'll now pass the floor to my colleague Sachin, who will guide us through the key aspects of the ruling and the major takeaways for businesses. This will be followed by an in-depth panel discussion. Over to you, Sachin.
Thank you, Krishan, for this wonderful introduction and setting the context. Very good afternoon, everyone. It is an honor to address august audience today on a matter of significant importance. So Supreme Court has laid down fundamental principles of interpretation on eligibility of ITC for real property used for commercial purposes. If we see history, several landmark judgments had been pronounced that have remained topic of discussion for decades. So various constitutional amendments have also been remembered for their lasting impact, like Amendment to Article 366, Clause 29A, which allows state to tax on transfer of property in goods during execution of a works contract. Supreme Court in Builder Association clarified that when a person enters into a contract without completion of a construction, this amounts to works contract. Gannon Dunkerley on taxing goods or services in works contract separately, the many engineering on movable and movable property, BSN on deemed sales transaction, and now Safari Retreat judgment, which may pave the way for similar amendment in future. So Safari Retreat's decision has a far-reaching implications not only for developers of shopping malls but also for various infrastructure projects like ports, airports, office space, educational institutions, so on and so forth. By upholding eligibility of IITC, court has provided clarity to the extent of legislative intent to avoid cascading effect of multi-stage taxation. So as we delve deeper into the specific of this case, let us appreciate broader impact of this ruling and potential it holds for future infrastructure projects. Next slide, please. So let's start with a brief overview of the case to set the context. Petitioner is engaged in construction of a shopping malls intending for leasing. So they incurred substantial cost on inputs like cement, steel, escalators, various input services. Petitioner challenged constitutional validity of Section 17 subclause 5 and 16 subclause 4 of the CGST Act before Orissa High Court. Just to apprise to the audience that Section 17 clause 5 specifically disallows ITC on goods and services used for construction of real property meant for leasing. So petitioner's plea is that section restricts seamless flow of credit and such denial of input tax credit is unjust, arbitrary, and contradictory to the basic fundamental of GST law, that is cascading effect. Considering provision of section 17 clause 5 subclause D, Honorable Orissa High Court ruled that narrow interpretation put forth by the department is defeating very objective of GST law, so benefit of ITs should be passed on to the petitioner. Next slide, please. So, to interpret Supreme Court judgment effectively, it is crucial to understand rationale behind provision of Section 17(5)(c) and D. Section 17(5)(c) restricts ITC for works contract services. ITC for works contract services, again I'm saying, when supplied for construction of an immovable property, except when used for further supply of works contract services. Section 17, Clause 5, Subclause D restricts ITC on goods and services. 5C for works contract services, 5D for goods and services received by a taxable person for construction of a real property other than plant or machinery on their own account. Exception here is for plant or machinery, which is not defined in the GST law, though plant and machinery has been defined. That but leaving room for interpretation. Next slide, please. So, interpretation of these terminologies has led to dispute before Supreme Court. Department says plant or machinery should be interpreted as plant and machinery. So, department argued that use of or in clause is a legislative oversight. So, if word or is not interpreted as and, it would result in discrimination as ITC would be restricted solely to works contract under clause 17(5)(c). Petitioner contended that section 17 clause 5 subclause clause C and D intentionally differentiate the use of the words plant or machinery, plant and machinery. So also petitioner contended that section 17(5)(c) and D are violative of article 14, 19 and article 300A of the Constitution of India. Further, phrase on its own account should be given a purposive construction. Next slide, please. Now, let us try to understand Supreme Court's observation and their judgment basis contention of both parties. Supreme Court critically analyzed four areas, that is constitutional validity of specific sections, 17, 16 as I've discussed, difference between plant and machinery, plant or machinery. Honorable High Court has also evaluated, Supreme Court has also evaluated meaning of on account in judgment and functionality test to determine what is tantamount to plant. So let's understand the same in subsequent slides. Supreme Court emphasized that ITC is not an inherent right of taxpayers but a benefit conferred by statute. So unless a specific statutory provisions grants ITC, it cannot be claimed as a matter of right. So exclusion under 17(5)(c) and D are valid as long as statute stipulates that. So this classification serves a legitimate purpose and maintains a rational nexus with the objective of CGST Act. So considering all, challenge to constitutional validity was dismissed, as Krishnan has also mentioned. So as court emphasized in its judgment that each case must be checked independently and no standard view can be taken for all construction activities. So each construction must be evaluated based on all these parameters and needs to be tested individually. However, there are still some gray areas where scope of litigation exists. Although it was categorized that theaters will not get ITC, but all malls are coming with theater facility. So what should one do? Have demarcated area in that, create separate books of accounts? So one has to look into all these aspects. Next slide, please. So there is a distinction between plant and machinery को plant or machinery. So expression plant and machinery has been defined in explanation to section 17(5), but expression plant or machinery remain undefined. So it appears that such a distinction is a conscious and intentional decision of the legislature because expression plant and machinery has been used multiple times in GST provision, approximately 10 times in GST provisions. However, plant or machinery is only used only once, that is in section 17(5). So a deliberate segregation in the wording cannot be considered as a drafting error. So that was intentional. So Supreme Court explained that expression plant and machinery required presence of both plant and machinery together. So on the contrary, phrase plant or machinery can be referred either a plant or machinery individually, which can be considered an immovable property or not. So considering absence of an explicit definition of term plant, its ordinary meaning should be taken, which is available in general parlance or in some other statute as available. Next slide. So another important fact is functionality test, a major detrimental for establishing what qualifies as a plant. Any building that is constructed to serve as a shelter or space for conducting business activities would not qualify as a plant, as it does not serve a direct functional role in operation of business in itself. However, if a building such as a dry dock, which plays an integral part of the specific processes like holding ship in a position during repair, it would qualify as a plant. Solar power is a plant. Power station is also a plant. So applying functionality and essentiality test as mentioned in various judgment, Supreme Court has held that a building might qualify as a plant if constructed to meet specific technical requirement. Term plant cannot be restricted by definition of plant and machinery, which excludes building. So a building could be considered a plant under functionality test and should be interpreted accordingly. Supreme Court also caveated that each mall is unique and a facts-based inquiry is necessary to determine whether it would qualify as a plant or not. Similarly, like a warehouse or any other building, except hotel and cinema theaters, which has been specifically denied, mentioned in the Supreme Court judgment, not qualify as a plant. So warehouse, any other building must be assessed individually to determine if they meet the criteria of plant or not, or being classified as a plant. Since High Court has not determined whether mall would satisfy functionality test to qualify as a plant or not, Supreme Court remanded case back to the High Court to define all these functionality tests. So each case must be examined based on how structure contributes to business activities. Buildings that play an integral part in generating taxable output, example, malls for renting out spaces, warehouses, can potentially be classified as a plant and may qualify for ITC. So each case will be judged on its own merits. So businesses should be ready or for fact-based inquiries by tax authorities or courts to evaluate whether their properties qualify or ITC or not. Regarding interpretation of expression on account, Supreme Court has held that construction is considered on account if it is either for personal use, like any office or factory for personal business, or use as a setting for undertaking business activities. In nutshell, what is the end purpose of that building? If property is built For lease or license, it does not qualify as a construction on count, making it eligible for ITC. So lease, tenancy or license for land or letting of building are always supply of service. So that's how ITC would be available. Supreme Court observed that sale of a building is considered as a supply of service only if payment is received before completion of construction or first occupation, whichever is earlier. However, there is no such requirement or provision for lease or tenancy of land building, and it remains a supply of service regardless of when payment is made. Next slide, please. So, as professionals, we must exercise great caution when advising our clients on this matter. It is essential to thoroughly verify all items and ensure that each building meets parameters outlined in Supreme Court judgment to qualify for ITC on construction activities. Journey so far has been challenging and path ahead is even more complex. Although Supreme Court's verdict has resolved some area of ambiguity, that is the intent of the legislature, it has also given rise to new ones. Right? Not many other ambiguities will also come up. So let's discuss necessary action to move forward effectively. So basis risk bearing capacity, we envisage four different situations or actions. First is where ITC not availed. Assessee or taxpayer will avail ITC for financial year, may avail ITC for financial year 24 till 30th November 2024. Whether any credit belongs to any year before 1st April 2023 will be lapsed because of the restriction laid down under section 16. Second situation is ITC availed and reversed. So here ITC earlier reversed for goods or services other than works conduct services. Possibility is that to reclaim it. Though again timeline needs to be followed. Again two set of interpretation come into play. Third situation is ITC availed but not utilized. Here again ITC availed and parked in ECL. Possibility is there to utilize the same against output liability, and as discussed all parameters needs to be satisfied. Fourth and last situation is ITC availed as well as utilized. Here, cases where ITC has already been availed and utilized, no action would be required. However, for cases in section 17(5)(c) or D, either of the condition is already discussed. If not satisfied, department may contend for payment of taxes along with applicable interest and penalty. Though penalty is again a matter of discussion because it's a matter of interpretation. So that also needs to be looked at. So in nutshell, all cases need to be analyzed considering judgment before taking any action on ITC. Next slide, please. So this judgment is not restricted to malls only, but it has wider impact to all industries engaged in construction activities, either for providing output, supply of services for their business use. So possible uh, affected industries like manufacturing, mall retail, commercial leasing, warehousing, co-working spaces, nuclear and solar power plants, etc. So in final verdict, court specifically mentioned earlier judgment of Anand Theatre under Income Tax Act. In result, it is held that building used for running of a hotel or carrying on cinema businesses cannot be held to be a plant. In another case, Honorable Court in Income Tax case of Karnataka Power Corporation took a stand and held when a building is specifically designed and constructed with some special features to attract customers, building could be treated as plant. So court also held that an electricity power generating station building would have to be treated as a plant and it would satisfy the functionality test. Slide please. So Safari Retreat judgment has opened several avenues for potential changes and challenges in the realm of ITC. Supreme Court's decision would prompt legislative amendment to Section 17(5) of the CGST Act. Judgment highlighted ambiguities and potential issues in current wording in law as of now. So to address this, lawmakers might consider providing clear definition of terms like plant and machinery to avoid confusion. A referring matter back to the High Court creates significant uncertainty for business. So as outcome will set a precedent for similar cases, but that outcome will come after maybe 2 or 3 years. And in the meantime, budget will also come. So High Court's decision will be crucial for establishing whether commercial properties like mall can be considered as a plant for ITC purposes or not. Businesses may face challenges in planning and claiming ITC until a clear judicial outcome comes out. So this judgment is likely to lead a new litigation as businesses seek further clarification on ITC eligibility for mixed use properties or those constructed for specific business models such as malls with multiplexes with hotels. So this could also lead to more cases being brought to court uh, to interpret law in various contexts. So there is further need for judicial or administrative clarification to provide businesses with a clear understanding of their ITC settlement. For real estate sector, ruling may push developers to reevaluate financial structure of their projects to account for potential changes in ITC claims, and also viability of the certain projects could be affected if ITC claim are restricted. Similarly, ambiguity surrounding terms of plant and machinery and plant or machinery needs further legislative or administrative clarification. Reason being, classification affects eligibility of ITC, which will ultimately impacting tax liability of project and planning. So, ladies and gentlemen, Honorable Court in its wisdom recognized the denying of ITC in such cases contradicts fundamental principle of GST, which aims to eliminate cascading effect of taxes. So by allowing ITC on construction of properties that generate taxable rental income, court has ensured that businesses are not unduly burdened by additional cost because they have cleared the intent. So this decision is a beacon of hope for developers and infrastructure companies as it aligns with broader objective of promoting economic growth and development. So judgment is a testament to judiciary's role to interpret law in a manner that fosters fairness and economic efficiency. It underscores importance of a tax system that supports business activities and contribute to nation's progress as well. So let us move forward with confidence that our legal framework continues to evolve in a way that benefit all stakeholders as intent of the judiciary is clear. Though how the administrative work will go on, that time will tell, but the intent is clear. So with this, thank you. That's end with technical presentation. Over to you, Krishan. Thank you.
Thank you. Thank you, Sachin, for the insights which you provided on this judgment. And clearly, so like you mentioned in the end, while the outcomes always seem positive in terms of what has been laid down, at least in this case, we also have a lot of ground to cover in terms of what will happen in future from the perspective of at least what will Odisha High Court kind of interpret as far as the definition of plant or the fulfillment of the conditions laid down as far as the functionality test is concerned is there and not in this case. Plus the fact that what will be the department stand because the revenue involvement of the stakes involved are very, very high. And they've always maintained the view that this is not an eligible activity for ITC. So that is a restricted kind of a claim where ITC should not have been availed. I think from that perspective, I'll bring in a panel here and ask certain, very key questions emerging out of this discussion which Sachin just had, and generally from the perspective of what lies next. So I'll bring in Manoj, Shabla, Manik, and Sachin back in for a panel discussion. And starting with you, Manoj, from your expertise in terms of litigation, your expertise in terms of the interpretation, and what you see of this ruling. What are the key aspects or the critical aspects which you see are the most vital in this case? And what are the open issues which taxpayers should be mindful of?
Thanks, Krishan. Good afternoon, all. So, like for me, I think there are two takeaways. One, that Supreme Court uphold constitutional validity of Section 17(5) and Section 16(4), and second, introduction of the term functionality test. So if I elaborate on constitutional validity, this is in line, like I think this is the fourth judgment after Cosmo Films, VKC Footsteps, and Skill Lotto Solutions, and where it has been made clear that they are not going to interfere into policy matters. So as he has clarified that decision regarding what should be taxed, the rate of tax, and the underlying social and economic policies are well within the framework of legislations and should not be interfered by the courts. So that point has been settled, I think, as for now. And any challenge to policy, I think, would be a waste of time and energy. That is one. Of course, the very important part was functionality test, as Sachin elaborated, that credit should be allowed where, on the basis of functionality test, you are able to prove that any particular building or particular immovable property would satisfy or would be essential to carry out the business. Whether business it is required for like manufacturing, whether it is required to give it on rent or earning revenue for the company on which GST is payable. So in all such cases, subject to the functionality test, credit should be allowed. And like I'm not getting into, because already explained by Sachin, plant and machinery vis-a-vis plant or machinery. So that differentiation has been explained very well in the code with the help of various judgments. However, I would like to draw certain points which raised by the ASG but not answered by the Honorable Court. That is section 16.3, which bars availment of depreciation vis-a-vis credit simultaneously. That has not been answered. Similarly, there was section 18.6 and 29.5, which allows reversal of credit in case of deregistration as well as disposal of the property, has not been answered. And as Sachin mentioned, that plant and machinery has been mentioned 10 times vis-a-vis plant or machinery only once. So there is no adjustment as of now. So that is something, a open point, and may lead to litigation in future.
Right. I think the point which you made in relation to plant and machinery and plant or machinery remains a vital question. And the way it has been kind of put out right now, and the ball is in the court of the, ball is in the Orissa High Court as far as they are concerned in terms of interpretation, and looking at the current ruling in hand, I think has a far-reaching consequence in terms of what really will entail. But bringing that back to me asking that question to Sachin on plant, and I think that's something which is pretty vital in terms of the way it has been looked at. And I will come back to, Shabla and Manik to kind of also look at what has been held. But Sachin, I think that what you mentioned and what Manoj just talked about, the Supreme Court decision's impact, on the eligibility of input tax credit on worst contract services, which are availed for construction of human property. If it is qualified to be a plant, what would be your view on that? Does it have an impact on that or not?
Yeah, so this question is very varied question, and there are a lot of permutation and combinations around it. So, what tantamount to plant? See, Supreme Court decision in Safari Retreat case primarily addresses eligibility of ITC on goods and services used for constructing real property intended for lease, which covers under Section 17(5)(d). However, availability of ITC on works conduct services for construction purpose covered under Section 17(5)(c) has not been answered by the Supreme Court at all. So, although if High Court lays down principle what tantamount to plant without touching works conduct services provision, I would prefer to take benefit of Section 17(5)(d) but not C, and draft divisible contracts in a way to receive goods and services separately. So overall, transaction should not qualify as a works contract and avail ITC benefit under Section 17(5)(c). Of course, one need to see how divisible contracts judicial precedents were pronounced in past and structure it accordingly. So considering the overall what tantamount to plant or not, again functionality test, essentiality test will come into play. But as of now, it is a matter of time what High Court will pronounce.
And do you think that it is necessary, and this question I'll ask back to Manoj as well, do you think it is necessary that something government will have to do in terms of the, defining what plant actually means or comprises of, to actually bring that clarity of what should be the law it should be looked at as we move forward?
Kishan, definitely, because the entire gambit is dependent on non-availability of definition of plant in under the GST laws, and they have relied upon the allied laws, that is Income Tax Act. So, of course, a prudent law would mean that they should have a definition of plant, and considering the kind of litigation has already gone, they should bring it with prospective effect to not unsettle what has been settled by the Supreme Court.
Absolutely, absolutely. Shabla, it's a sector which is very, very crucially looked at in terms of the cost which it entails and ultimately passed on to the end customer. And that's the reason why real estate costs and the industry has been always, claiming that, there should be beneficial treatment to be given, because in past when ITC was denied, there was sudden change, and I'll know what Manik feels when he talks about it later. But what's your view in terms of this impact of this ruling on the sector at large or the infrastructure sector at large?
Thanks, Krishan. It does certainly have a significant impact. At least today, when there's a lot of focus on infrastructure and real estate, we are trying to bolster that. Uh, Savings of 18% on the GST, which becomes like a input credit available to you, is significantly going to reduce the financial burden on the developers, as well as help them to manage the cash flows effectively. And the overall project cost is also going to come down. So it will definitely provide ease of liquidity, reduce the liquidity constraints, and overall also improve the IRR for the developers. But like everybody has been saying, it depends a lot on the functionality and whether the building qualifies as a plant or not. That is something that will be very crucial in this. But overall, yes, it's certainly a positive impact for the sector.
And do you foresee this impact beyond the real estate sector for the local
Definitely,
infrastructure?
definitely, because
So there's
some
an
of the
opportunity for them as well
some
to
of the
actually
other
look at this.
other intra sectors like Sachin did mention, solar plants, ports, airports, any sector where building becomes a tool for you to do your business. I think all of those will get direct impact on this judgment.
Right. Let me not wait and bring Manik in between now. Manik, thanks for joining in. And, you know, early days, but what you heard from the experts till now and what you've heard and you interpreted as an expert yourself, what is your take from an industry standpoint of how this decision is being taken, on what has been actually the impact, on what are the key principles which have been highlighted, and in terms of commercial considerations?
Look, we guys have been waiting, and one thing that will continue is we guys will continue to wait. So clearly, I think from industry point of view, our expectation from this judgment was higher. We were looking at a clear-cut diktat. The matter has been argued in court for ages. It has been sent back to High Court for a fact-finding issue, and High Court is not a fact-finding body. So, honestly speaking, I think our expectation was things to be made crystal clear after years of discussion around the topic, so that we get a clear cut manner in which we are able to underwrite our cost, and accordingly we are able to underwrite a particular business case. Unfortunately, that has not happened. So, as it appears, we will have to further look for how High Court comes up with the final order. But one thing I think that we guys will be doing is that all the GST that earlier was being taken off as an asset, we were writing it off. All that particular portion we will now start taking as a taking it up as a GST credit. I don't think we are confident enough to start utilizing it yet. But yeah, entire everything that we have taken, we probably will be reversing it, holding up it in our books as a credit, and we'll be hoping that we should be able to utilize it as and when we do hear from High Court. I think one of the confusing element is that there's a portion of work order where it is stated that plant and machinery is well laid out, and the courts will not interfere, but plant or machinery for service order, we probably will be able to take benefit of. Now, this is effectively, as a real estate, this is effectively someone trying to touch our contracting strategy. So how exactly we go about constructing a particular building? If, in all fairness, if a particular getting a GST input will be based upon our contracting strategy, I see this particular aspect as slightly unfortunate. That's for a contracting strategy to be determined, there are 30 other things that needs to be thought through, and this is the last one that we would want to deliberate about. But yeah, I mean, it appears that it will become a part of our discussions going forward.
I'm sure, Manik, and you rightly mentioned that there are a lot of business considerations around a project which are very, very carefully looked at by any real estate developer or builder. But at the same time, an 18% impact of GST cannot be undermined in the way it was expected to come. Maybe what you're saying is that it did not really fully clarify the right course of action, but gave a guidance in terms of what actually the code interpreted to have a direct business nexus to a particular asset. And that's why you should look at it as a consideration for eligibility of ITC. But there are still some bit to achieve when you get the absolute clarity in terms of actually saying that I'm not going to park it as a cost, or I'm going to upfront utilize the credit. But you also mentioned that since you're considering the fact that the ITC eligibility will be relooked at and you might reinstate credit, do you think going back in time beyond a period of a year is also something you're contemplating?
Well, so look, I think it's a Supreme Court diktat. Uh, our current interpretation is that based on Supreme Court order, end of the day, it's a clarification or an order which has come out just now. So we should utilize it on an immediate basis. Right now, there's a very strong argument that because earlier there were confusions, hence we had written it back, and now based on order we are writing it. Hence that parameter of 6 months or 18 months should not be considered. Again, I think because of the fear that how exactly it will be seen, we currently don't intend to utilize it. Unless and until you utilize it, there are no penal provisions or interest that will kick in. We believe that it's way more rational to correct your financial statement, correct your returns, and take it as an adjustment entry and consider the entire amount as of now. And then let's probably wait and watch for High Court, hopefully this time, to give a clear-cut diktat. And most likely, as the order is, I think it's slightly confusing in all fairness. As it appears, most likely there will be some clarification, some amendment of laws that we can expect based on this particular judgment. So our current expectation is that before High Court comes up with a final order, there will be some clarification that government will bring on its own. So let's wait for it. I think that's the best thing that we can do as of now.
So wait and watch is what you believe is the most prudent way of looking at it, while a baby step towards actually working backwards to look at what is the credit which you have actually expensed off or not utilized or not availed as of now, and bringing it back into the books is something you are considering as of now.
Yeah.
And I think at this point, also the same point I'll put down to Manoj and Shabla in that order. What is your thought in terms of what you just heard from an industry expert in relation to, looking at it, from that perspective of one side taking a positive impact out of it, and on the other side, still wait and watch. So what is the position which you think would be the most prudent for evaluating the ITC or the eligibility, specifically in relation to old commercial projects?
Krishnan, I completely agree with Mani. One, where there could be three buckets. One where we are talking about 23, 24 and 24, 25, where we have time. We should definitely avail credit, and considering that it has been referred to High Court, we should avoid utilizing that credit. Second bucket would be where nothing has been done, like for the past period, and no credit availed, not reversal, nothing has been done. Even in that case, I would say that even if you have 1% chance, you go ahead, avail that credit, and even in the worst case scenario, you will have to just reverse it, because unless you utilize it, there cannot be any interest or penalty on you. So you avail it, otherwise you will miss the bus. So you avail that credit. And the third bucket is that where you have availed, reported, and then reversed it. In that case, you should wait and watch. Don't jump in to utilize that credit. You should wait and watch for the final verdict, either in the budget or by way of clarification or High Court judgment, whatever happens earlier.
At least from what I heard also is that from a future standpoint, while there is a wait and watch, but there is obviously a positive side to it. At least for the future standpoint, if we are going backwards till the time we have the eligibility still to kind of reinstate credit, For future projects, definitely it's a matter of consideration, which will definitely be on the cards, which is what I think Manik also said, and what you also saying, especially considering the fact that even if the ruling applies prospectively, there is a window at which we can go backwards, and there's a clear window of opportunity on as we move forward. Shabla, same point to you in terms of the eligibility. A real estate company would look at it from that perspective, but my question goes back to how far we can stretch this argument to look at other kind of infrastructure companies doing the same thing for them as what you heard just now from experts.
See, I think there are two things, right? One is what have companies done in the past? Those who have actually gone ahead and availed the credit, they've not capitalized it in their books. So best situation is to analyze whether they will meet the functionality test or not and be ready depending on what the High Court ruling turns out to be. Budget is also due in Feb. So we'll have some kind of guidance around where it is headed to. But most important to do an analysis and say, are we meeting the functionality test or not? And if we are not meeting, what's the next course of action? Because there will be two other, like while we are discussing GST, there is income tax also that will come into play. Because where you capitalized it already, you would be claiming depreciation in the past. But
Right.
where it is not, do you have the ability to really go back and increase your written down value and claim a depreciation? And what happens to what you claimed in the earlier period? Is there a ability to do those adjustments? Today, the Income Tax Act doesn't really allow you. So these are all those aspects that come into play.
Right.
Where you're writing of these credits, would you be able to really take a deduction for those? So I think maybe it's best to take a look at what positions have been taken, not only in GST, income tax, also in your accounts. And all of this is going to have financial impact, right? In some sense on your financials also. So I think be ready. That's
Sure.
what I would say.
I think I was about to ask you the question which you already touched upon in terms of how this interplay between the ITC eligibility under GST and the depreciation benefits on capital goods and construction expenses, which had been claimed by most of the taxpayers who have not availed of this credit or, forget utilization for that matter. What is the possibility to actually go back and revise the returns to adjust these claims in light of the judgment? You think there will be a challenge in terms of doing that, or that's something which is possible?
See, there's a limitation in terms of to what extent you can go back and revise your income tax returns. Revision is possible for 9 months from the end of assessment year. So there's very limited ability to do the revision. Max, you may go back to 1 year. In a situation where you're going to claim a lower depreciation, basically end up having a higher tax liability or a reduced loss, you may still have the ability to go back and file a updated return. So those two options are available. But it all is very driven based on what facts are and whether you meet those conditions or not. So it's not a straightforward a yes or no answer. And the Income Tax Act doesn't have the ability to do the adjustment to the written down value except in certain situations. So that again becomes a constraint.
And I think the benefit around the GST vis-a-vis what you actually calculate as a depreciation portion on that impact of the differential GST. Manik, do you agree with what Shabla mentioned about the fact that the GST claim probably could be something which could be looked backwards, and considering the fact that there is also depreciation which may have been claimed, if at all, then that impact gets reduced, or you think that still continues?
Look, I think now it's complicated. She is right. It's complicated. It's not an error that was done in accounts. So maybe the requirement of restatement of book is there or not there is a question mark. Can we consider this as a policy change? Again, the way Indians look at policy change, accounting is very different from earlier how accounting standard used to be. It would have been easier if accounting standard would have said all is prospective and move ahead, account for all your error and move ahead, or change in policy. So it's complicated. No two bones about it. What quantum we are dealing with, that discussion will have to be done along with auditors. But I think from industry point of view, our stance will be more inclined towards even if certain depreciation has been taken, decapitalize it, given the judgment, Now, whether we can take it through exceptional, how exactly to clarify in notes is a honest matter of discussion. But our ideal stand will be decapitalize it and start taking input credit out of it. No, I don't believe, of course, I mean, while judgment is vague about it, obviously you can take only one of these, can't go ahead with both the benefits. So yes, I think decapitalize, take as an input credit, and hold it. Now there is a risk. You have decapitalized it. Second, you are not utilizing it. But then I think that's still a better risk to take at this point in time. At least from real estate point of view, my sense is that that's an answer that we guys will be craving towards if that's doable. Now, still early days. Whether finally that's a call that is taken or not, I think very difficult for me to say. But most likely that's how we guys will be working towards it.
So what I'm hearing from you, Manik, is that till now you were hoping and hoping and hoping all these years of something would come out while nothing was claimed and everything was a cost. But today, when there's an opportunity, claim the maximum out of it, and then hopefully see if the law actually prevails and provides you that path to actually go in that direction. Actually.
Yeah, basically.
Absolutely. Manoj, I think a lot has been talked about in terms of the functionality test and the plant. I think it is important for us to also now kind of look at what could be the factors the Odisha High Court would consider in your view, in terms of when the matter is remanded back today to the Odisha High Court on the interpretation of plant and functionality test. What do you think could be the path which the High Court could be thinking or would have to kind of take into consideration?
So, Christian, I think the fundamental question would be whether that building or whether any particular part of the building is essential to run the business, essential for the business. So if you are, suppose like you are in a cement plant, you are constructing something to store cement, which is very critical. Of course, that can be called as plant. Today, you are not getting credit on that. Similarly, if you are constructing a hotel, and hotel would be rented out. Obviously, there are certain remarks regarding that, but essential would be that whether it is a requirement, whether it is a must to run that particular business, whether it is a must to earn revenue out of that particular building. That would be a determinant factor whether it passes consumer functional test or not. So, suppose there is an office, and that is being rented, or a WeWork structure, which is being rented out and revenue generated out of it, and then they are paying GST on it. In my opinion, that passes functional test and credit should be allowed in all such cases. Similarly, where warehouses are constructed, where goods are being kept for further supplies or for like sale, on which GST is being paid, definitely that should pass the functional test. So, of course, as the Supreme Court mentioned, that it is mainly the fact-based scenario, and each and every case has to be evaluated from this perspective, that this is not just an asset, this is not just a fancy asset which has been created. It should be essential part to run that particular business to pass that functionality test.
And just to add what Manoj is also saying, although there could be a different views with respect to cinema as well as hotel industry as well, because ultimately, if I talk about cinema, that building is also used for the purpose of generating business also, right? Similarly, if I talk about hotel, that is also being constructed for the purpose of business. So demarcated uh, area, or so to say, matter of interpretation could be that a building which is used for the purpose of admin purpose, which has nothing to do with creation of a business at all. So that can be one of the functionality test, which court has also discussed somewhere. And although it, as Manoj has also mentioned, that it will go back to the High Court, but ultimately the building which will generate revenue one or the other way, or maybe a machinery which has been set up in a building which creates the revenue, that can be covered in the functionality test.
I think the point which you made in terms of how the High Court and what they will actually look at, and I take point from Manik what he mentioned. High Court is actually not a fact-finding authority, while looking at the interpretation of what really qualifies as a plant is a task which has got some fact elements to it, but it will be very interesting to look at the way they will actually consider the arguments which are placed before them to actually come back and actually conclude whether in this case, what are the principles which will kind of lay that foundation in terms of saying that this is a plant or not
Right.
from what as Supreme Court has laid down as principles in terms of functionality test. I think we're very, very critical, and that's something which everybody will probably look up to in terms of what will happen. And in that, probably we have been talking about industry, we've been talking about our interpretation as professionals, but there also is department which is impacted by it and the government. So what do you think, Manoj, is a case? Is this, and we already hear that the department is also looking at filing a review petition on what has been held by the Supreme Court. What do you think could be the running in their mind in terms of the review petition or the arguments or the changes which will be most impactful in this context?
So, Kishan, if you go back, you will find that this dispute is not new. Even under the previous regime, this was a prominent dispute fought like tooth and nail by the industry. And finally, the government said, no, nothing doing. We are not allowing credit in such cases. Okay, so they had the opportunity to rectify when they were, or clarify when they started with GST, because that was a clean slate at that point of time. But they chose not to do that. So, and even if you read the judgment, the ASG clearly mentioned that this is a mistake when he was defining or he was justifying plant or machinery vis-a-vis plant and machinery. He did not agree. He said that it is a mistake. And I'm sure he would have not said so unless he would have got instruction to say like that, because we know how they work. So, like, at some function of the government, they are of the belief that they do not want to allow this credit. Apart from that, if you look at the drafting of the law, drafting of the GST law, they have not provided for any eventuality where credit would be allowed on plant. So in case they have intention to allow credit on plant, they would have made or drafted law accordingly, which we could not find out, and which was pointed out by ASG as well in para 16 of the Supreme Court judgment. So as of now, to me, it is not that clear-cut thing. And I'm sure, and I have read in some newspapers also, that both parties are planning for review petition. So as of now, if you ask me, the review petition at this stage is a very big possibility. And let's say it is inevitable types.
So we can also expect something more to come back if there's a review petition, but it will also be seen how Supreme Court looks at it once they've already taken the decision about that. But I think that we are closing, we are close towards the end of the session, and it's been very insightful. So my final question will be to each of you individually. I'll start with Manik. Manik, while we've heard what you've said, do you see a possibility of an amendment, retrospective or prospective, as a result of this ruling?
You are on mute, Manik. You are on mute.
Manik, you're on mute.
Yeah, sorry. So we are in business of real estate. We ought to be hopeful people. We ought to be optimistic people. So yeah, we are hoping that something comes up. Yeah.
You're hoping for an amendment which will be favorable, is what you're thinking of.
So I think while Manoj did clarify that many times it has been stated, service tax time, GST time. I think one spirit that has not gone. We have always been requesting. So that spirit has not changed, and we will continue with that.
Probably one of that is an outcome of what has happened till now is that there was industry which was really aggressively looking at that, and something which has happened on that. So we cannot take that away from at least what the Supreme Court has done. But we are only hoping, and for you, that this will actually go into the direction where a positive outcome of that will be expected. But going back to what lawmakers believe, I think, Shabla, what's your take on expecting an amendment, retrospective or prospective, from a legal statute standpoint and from a government standpoint?
I think there may be an amendment on a prospective basis. The government's intent has been that they don't want to bring in any retrospective amendments. But given the kind of issue that is at hand, certainly there has to be some kind of guidance at least uh, of what happens to the past matters. Because right now it's only a direction, and at least I would look at it with a ray of hope that they have recognized that there is a need to give credit for this GST, especially for real estate and infra projects where it becomes a significant cost, right? Uh, so they have to resolve for the past period. So some kind of a clarification and guidance, and any amendment where going forward should ideally be on a prospective basis. Doesn't make sense to bring in a retrospective because it has larger ramifications, right? Not only GST, your accounts, income tax. So someone will have to take a look at it in a more holistic manner.
Right. And I think as I was talking to you, I was also reading up the questions in Q&A. Many of them actually were actually on the ground that is there be a retrospective impact of this or not? And what would be the stance of the government as we move forward since budget is around the corner and this ruling has just come in. So Manoj, devil's advocate, what do you think in terms of what you can expect the government to do to actually either enable this judgment or to look at the way they maintained a view that ITC were never available?
So, Krishan, either way, there have to be retrospective amendments in the law. So even if they want to implement this decision, there has to be some amendments, like be it section 16.3, 29.5 or 18.6. They'll have to have retrospective amendment, or they have to bring in definition of plant from retrospective effect. So there has to be some retrospective amendments. And at this point, I will just wish that better sense prevails and whatever they bring in should be beneficial to the industry.
I think the point which also kind of, and I'm reading questions again on that, is that everybody is eager to kind of look at it from the perspective of what is plant and machinery and plant on machinery, and definitely a matter where something will come by the government to explain the interpretation. And I think from what we are really hoping from the Orissa High Court will give a cue on what should that be in terms of the functionality test, but vis-a-vis plant. I think that should throw some light. There's an opportunity which the court also has to do that, and government to follow for that matter. On that note, I think we've almost just touched time. We had a couple of more questions which have been put out here, but due to paucity of time, ladies and gentlemen, and the insightful session it was, probably we'll look at these questions. If you can mail us back some of these, and our email IDs will be displayed as we ending this presentation. And for the questions which are there, but many of them which are fact based, I think the answer to that for all of us as a passing note is wait and watch. So wait and watch is something which is important from the perspective of what the Odisha High Court will do. Wait and watch is important to look at whether there's a review petition which is coming up. And wait and watch is also important from the perspective of what we really see if government comes back with amendment, a change in the upcoming budget for that matter. I think these are the things which are part of the wait and watch. But in all likelihood, hoping that there's a positive outcome of all of these. On that note, I will thank my panel, Manik, Sachin, Shabla, and Manoj, for this insightful discussion. I think a lot of important points came out of this, which we believe will be important for all the people who are part of this webinar. So thank you all for joining us today, and hoping to have some more insightful session coming up in future. Thank you and have a good evening.